All right, welcome to our FogCutter Live. It's Mike Curtis with Traders Edge Network, along with Preston James, options trading veteran, founder of Traders Edge Network. Preston, we're coming here live, fresh off the Memorial Day holiday, so coming at it on a Tuesday, opposed to our usual Monday. But hey, happy late Memorial Day to you. I know you were busy on
You
the
too. I
grill.
know you were traveling all around with your son's rugby. It was right at Notre Dame, right outside of Notre Dame.
Yep, yep, South Bend, Indiana. First time I was there, beautiful campus to take in, and yeah, fun to
So
experience.
fun. Yeah, we did get a lot of grilling here, and yeah, it's one of those things where it's like, oh, what was you grilled every day, And then, oh, wait a minute, you have to work. The Tuesday hit with kind of the brake screech, and I made my burger sauce actually 2 different times this weekend. I just barely gave it to the UPS guy when he dropped off some packages. I was talking it up. But
There you go.
we
I've made the burger sauce. It lives up to the hype.
yeah, and the trick is you don't have all your party come over and say, "Hey, I made this amazing burger sauce. Wait till you do it." No, you don't say anything. You just happen to put it on each burger and then let the comments come in. So that's always fun. Mike, I wanted to say too that here we're starting a shortened week, and the tendency, and it didn't happen this last time, but when the market has a tendency to firm up, and that's fancy Wall Street language of saying go up into 3-day weekends, and especially like Thanksgiving and the Christmas and the 4th of July. It's been, and I don't know what the psychology is, and it doesn't happen every time, just like it didn't on this Memorial Day weekend. It was, I think it was digesting some prior gains, didn't really have that much run up, but boy, did that change today here on Tuesday. What are you seeing?
Yeah, absolutely. So, we kind of titled the podcast today Tariff, Tremors, and then we've just got a week of some tech titans reporting. So, we want to take you through this week ahead. So, absolutely. Last press, maybe we could talk about the news, what's sparking the market this morning, and then we could jump back and talk a little bit about last week and what we saw in the market. So, yeah, the big news, again, the tariff front is still the news that's driving the market in a lot of ways. Last week Trump came out kind of a little stronger towards the European Union, and then had a phone call and immediately backed that off. They delayed some of that 50% tariff kind of proposition that he had until July 9th. So that news came after the close on Friday, or maybe it was Saturday. It's all a blur as I was bouncing around this rugby national championship tournament. But that's really what sparked these futures to just kind of light a fire. And we saw the market react positively at the open today.
I did also note that there was a consumer confidence report that hit before it was 10 a.m. Eastern, so a half hour after the open. So, and I wasn't around during the first hour. I usually like to plug in start taking a look about an hour after. So I wasn't following the futures and all that stuff. But
yeah, and one thing that I love to see, right, when the futures open strong, and of course this was news driven, the pause on the tariff thing, and we saw the NASDAQ futures were up about 1%, the Dow futures were up about close to 1%, and then the market opens with kind of this gap up in that situation. What I really like to see is usually when you see a strong open like that, there's kind of this initial surge, and then in that maybe 30 to 90 minute window, you see some exhaustion, you see a pause, you see some profit taking, whatever it might be. And in the case of today, that pause was pretty minimal. We didn't see, if the NASDAQ was up 200-300 points, we didn't see it give up 100 points on that pause. It dipped a little bit, but then maybe it was some of that consumer confidence news that hit Preston, but we saw the market actually surge to new highs and see a little more bullish momentum swerve in behind it, which makes me feel like there is some gusto behind the price.
Wait. I'm going to cut all of that optimism and all of that goodness off to remind you about the chilling warning that was on the headlines last Monday, Mike. Do you remember the chilling warning headline?
I'm trying to think back.
Sell America.
Oh, that's right. Yeah.
Last week, just last week, it was Sell America.
Right.
So anyway, the biggest torture in the world would just be to sit back, listen to all this financial media, assuming that they've been doing it longer than me. They dress in those nice suits. They're on the TV camera. The lights are on.
Right.
And just go from whatever idea they have to the next. I mean, shoot me now.
Right.
Anyway, and let's also frame this where, I'm talking about this quite often of that it was, oh my God, I'm not going to take time. I know who did the guy who said the quote escapes me, but the guts of it is, there's nothing more powerful, armies, whatever, than an idea whose time has come. So I always have that in the back of my mind, and I'm trying to frame investment ideas and trading ideas with the power of that. And everyone knows, and Homer Simpson would have to know this. We're not trying to pull it out of our hats, like what the current idea whose time has come. Even Homer Simpson would have to agree that it's AI. And who do we have announcing earnings that is the 80,000 pound gorilla sitting to represent this very idea that's sitting in the king's seat is Nvidia.
Right.
They announced earnings this week. They announced after the close on Wednesday. Really, it's Nvidia's world and we're all just visiting. That's how the current thing is. Mike, I know, you know that we're on the other side of a market correction, even though they said sell America last week. All that's BS. It's all noise. So I'm not saying, Nvidia is going to do whatever. No, I'm just saying it's in a real interesting spot here. Post-correction, be very interesting to see not only what they report, but also what they say for guidance. A lot of companies have withheld guidance because they don't know over the next 3 to 6 months, especially if their goods are determined on importing goods and tariffs and all that. They can't say anything. I think Decker Outdoor last week, they came and announced earnings, and Wall Street's waiting for what's coming forward. They declined the guidance, and the stock already fell out of the ugly tree. It hit every branch. It just hit another 3 more. Interesting to watch right now, by the way, in my opinion, because it's fallen so much so quick. But Nvidia, Nvidia, it's hard to see anything else. Wednesday after the close, Salesforce is announcing Wednesday after the close. And it's some more that are interesting to me. Costco after the close on Thursday. Dell. Right. These are all after the close on Thursday. Dell, Ulta, Zscaler, and NetApp, which is NTAP. So those are very interesting to me for earnings this week.
A lot of big tech, a lot of ties into that AI, sector as you spoke to. So yeah, it'll be interesting to see. And maybe as we look, your Sell America, the headline that we saw last week, Fu, if we could throw just a chart of the S&P 500 up, the media always needs a headline to go along with the story. And so really what we saw was just the market was pretty extended, right? We'd just seen a really strong run coming into last week, covered a ton of ground, several days in a row we gone higher. We had a gap up a few days before we put in this high. And so what I love to see, because Preston, we talk about it all the time, the purest indicator of what a stock is doing is price action in volume, right? You can have indicators all over your charts. You could do fundamental analysis. All that is lagging, right? But the price action, the volume is what's happening right now. And so we can see last week on the S&P 500, a lot of stocks out there, they were just taking a very much needed breather, a pullback, right, as we call it in the technical analysis world, in the trading world. Everything was pulling back. And if you see on this chart, it came right into a couple major moving averages, right? Our 100 and our 200 day moving average. And then we just saw this pop off of those moving averages with that bullish move we're seeing today. So what we've established over this last, little over a month now is higher highs, higher lows on these indices. We had a much needed pullback. The market's never going to run straight up, week after week after week. It needs to balance itself out. It needs to pull back in, the bullish appetite. So these pullbacks like we saw last week are just very necessary. So Preston, looking at that chart, is there anything that you would add to that or chime in on there?
No, it's just solid. And I guess I can't fault the person who came up with Sell America. I mean, did they probably sell more of something or get more clicks? Sure. Anything to get attention. But the more we can tune out of that and kind of hear with our eyes, I guess you could say, and just knowing why are we hanging? Why are we even focusing on this? Because this will go down as the annual correction that we average. And by the way, the average time from when where the market got the highest, so some point around mid-February, that high was the highest point that the S&P 500 got. Right. So judging from there, mid-February, down through the trough, and then back up to where we eventually, the market's going to get to, well, it can do anything. We don't know. The world can end tomorrow. But if we're leaning on history, the market recovers from a correction. You can see we're almost there. And what it's taken on average to run through the high point to the correction low and to where it recovers, that average is 14 weeks. And we're like, so with the average, it's like 2 more weeks from now, or actually the first week in June is what it was, where 14 weeks would be. Of course, that's average. It could be 15 weeks, 16 weeks. It could take 13 weeks or 12 weeks and another correction, but just wow on that. So if we're leaning on that, you don't want to get sucked into the doom and gloom or the too good also. And I always note that when the gym trainers, when I walk in there for my session, if they're talking amongst each other and CNBC is up on most of the TVs, not Days of Our Lives, not sports, but if the market's going on and it's real green and they're commenting on how great this and that is, that's when it's getting too exaggerated, when it's made the gym
definitely
of a gym indicator. Yeah. Mike, I just want to take a sec too and say that we get nothing out of this, but we like to have this on our desk, this Stock Traders Almanac 2025. And before I could order it for 2020, Mentor Stella, we got a box. We get a lot of boxes around here, but we opened a box and she had a really sweet note in there. And so we got these a couple of weeks before 2025. But, you can open to June and it just has it's Hirsch is the author. So you can get it on Amazon. I think it's a Wiley. So we get nothing out of this, but it's a help. Is it worth it would it make you better and a more informed trader? The answer is absolutely yes. Yeah. And it just kind of said, I'll just say one thing. We're not going to spend much more time on it, but you come up on Thanksgiving, you'll see a little quote in there that might go along something like this. Hey, since 1940, the market has gone up on Thanksgiving week, 55 out of the last 62 times. Well, sign me up for that little tidbit.
Right.
Especially if we're going with week to week strategies, what you decide to adjust your strike price to on just that 1 week. Definitely. Man, if you've got 8-9 positions, I mean, just one little tidbit can sway things multiple thousands of dollars. This is like 30 something dollars, like a book. Yeah. So again, it's called the Stock Traders Almanac. They come out with it every year. There's so many really cool things about it. And I'll just say this, that over the weekend in some reading, I read a quote from Mark Twain that said, it's true that history never repeats itself, but he says it often rhymes. It often rhymes. So we're not going to get the exact thing every year, but when we get some things that help rhyme, it just is more empowering as we kind of go along, especially when the headlines are hitting you. You could say, hey, according to this, this is normally a strong week in the market, or it's kind of fun.
Definitely. And along those lines, I mean, there's that old saying, we kind of scoff at it for the most part, but that sell in May and go away. And if that's on like just your average investor's mind, I went and found these numbers just kind of going along the lines of the book you were just sharing, P. But from Memorial Day to Labor Day, right, kind of that summer period that, Memorial Day, the unofficial start of summer, but the S&P 500 is up on average 3.7% in that window.
How about that?
And it's up 72% of the time. So this is a period where we love to keep trading, right? We rarely, unless you're going through the depths of a correction, are we rarely out of the market and just kind of watching from the sidelines. So yeah, just right in that same vein, we're coming into a decent little stretch in the market. And even if it's not surging straight up, a lot of our income strategies love that kind of market environment, right? Where maybe it is a little bit slower climb. And that's where our strategies tend to really outperform the market, where maybe it covers 0.5% one week and then gives back, 0.2%, then another 0.5% up the third week, right? Our income generating strategies can really start to outperform in that market environment.
Absolutely. It's go time. I mean, as far as we're concerned, and I don't know that this will be etched in stone, but let it be said, if it's May, stay. I don't know if we can end on that, Mike, but I also know we're long in the tooth here.
Yeah, no, the last thing I think we could wrap up on, P, is, trading psychology is so important. In our team hub, it's our members site. We have our forums and our chat rooms, and, and going through a week like last week, right, where most stocks are pulling back, the S&P is pulling back. Maybe we could just close talking about some of that management, because, you jump into a money press trade, for example, that on average, we're trading that position for 10 or 12 weeks, usually kind of in that ballpark, 8, 10, 12 weeks. Not every single week is going to be profitable, right? We're going to hit a week like last week where there's a pullback, and that money press position could lose a little bit. But how do you usually position yourself? Maybe we could just end on that. So you have a week where there's a pullback. Maybe some of the trades still panned out. Maybe some you see a slight losing week. But I know Friday, as you were adjusting a lot of your positions, you usually take this approach when it looks like kind of this normal pullback type price action where, maybe there was a few trades that had a rough week. Maybe there was a loss on some that showed up. But how do you position that coming into a week like this week? And of course, we didn't know there was going to be some tariff news and the market was going to surge.
We don't know where we'll be on Friday.
Yeah, you didn't know that, but I mean, we're obviously off to a great start to the week, but maybe speak to how you position some of those trades in that situation where there's a pullback.
Yeah.
Looks very controlled. Some of the stocks have dipped. Maybe there's some losses, and you're positioning yourself into that next week.
Yeah, I mean, Trade Desk did that. Like, if we just singled in on like Trade Desk, for example, it had a surprise factor. First of all, backing up from anything, Mike, 3 out of 4 stocks go with the market cycle. And what that means is it's just how the stock market will move up and down. It'll cycle. So does the economy. And this is another thing people get really confused on and kind of bewildered, because they might listen to a Sunday morning news show that says, hey, the chances for recession, according to Case-Shiller and all these professional things, it's now 20% higher that we're going to have a recession. Well, that's the economy.
Right.
The stock market cycle and the economy. So if you leaned on that and said, man, they just said sell America, and now all these professional people are saying a recession's coming up, and we just had a kind of a crummy week in the stock market, you could go run and hide.
Right.
But so just framing this, we are recently coming out of a correction. What this is doing is taking 3 out of 4 stocks with us. So the movement in the cycle in the stock market is moving higher. And of course, it's going to have weeks where it pulls back. So framing that and then leaning on our setups for our individual, why did we get into each one of these positions?
Right.
Well, it could have been a surprise factor setup, could have been this, could have been that, which gives us a real edge. So I'm really leaning on the edge of our stock selection plus the market cycle behind it. Those two are so powerful. So when TTD had pulled back, I rolled it out very aggressively, anticipating a bounce. And man, we look like $1 million today, but this is only one day of the week.
Right.
Again, we have Nvidia this week. This will be a very interesting week.
Yep.
So here's Trade Desk.
Yep.
And look how it pulled back recently. And then when you go down and look at the volume bars below, the volume bars were getting smaller.
Yep.
As the stock was pulling back. All stocks pull back and take profit taking, blah, blah, blah. Well, here it's shooting up higher today, and rolling that out aggressively just means we put more premium in our pocket, anticipating. We're trying to flow with the market.
Right.
And we're trying to not be phased by stupid, idiotic headlines or movements or chatter from what we affectionately call the analyst cartel, because they're not in your corner either. They just, if you pull up UNH, I think one of them today is downgrading United Healthcare. Just take a look in awe. Who's in awe of downgrading UNH today?
Right.
Shouldn't they downgrade it and help you out when it's at 600 instead of when it's at 290? Right. So you don't want to listen to the analyst cartel either.
It's lost half its value. Yeah. So I guess to just wrap up that point, you're going to go through a week that's not always just, sunshine and rainbows. That's part of trading, and it's to be expected, right? Like, your account's never just going to grow 52 weeks in a row. But if your account can set these higher highs and then higher lows, that's the goal. You're still going to have dips. You're still going to have weeks where we go through some pullback, some positions maybe take some losses. But by positioning it how you did on some of these, right, where usually we're selling the put right at the money, meaning the stock's at 100, we're selling a weekly put on our money press strategy right at 100.
Right.
But if we sell that put, again, if the stock's at 100 and we sell it the 102 strike price, we're bringing in more premium. We have more upside if the stock goes up. Preston, you positioned yourself beautifully. Again, we're early in the week. We'll see how it finishes.
Week, yeah.
It's looking like Friday could have been a swing low. The bullish appetite's back. We got a little balance in the chart. We had a little profit taking. Things start feeling like it's on sale again. That the bullish appetite comes back in. And then if that uptrend continues, we could see a few more days until we're now setting a higher high, and the week plays out beautifully, where not only do we cover maybe some of those losses from last week, but now we're just flipped right back into profitability with a little bit of patience and understanding how the market is going to ebb
and feel all the more confidence to stay with the positions for the many, many, many more weeks.
Absolutely. Yeah. Well, good stuff. Any closing thoughts before we wrap this one up, Preston?
I like if it's May, stay.
There you go.
Yeah.
Yeah, we've got some data behind it. We've got some history behind it. As option traders, as individual investors, we can be so nimble. If turbulence comes, if more news hits that might really cause some ripples in the market, as individual traders, we can move and be nimble. And that's one of our big advantages versus trying to move a $3 billion position or something, right? Like, it's just hundreds of millions of dollars in Apple stock that can take you weeks to unwind.
I guess I will say finally, Mike, I mean, I'm super passionate about this. I think why we've worked together for so long is you're extremely passionate about it. And we build a community around this passion, so people can plug into this kind of thinking.
Right.
And try to, and to help them reverse maybe some of the mistakes that they were making, just being maybe too plugged in and
Totally.
following all this stuff. So the community that you can find inside the Wow Insider, for example, people love coming in there and love the hub, and they love sharing things, and they're sharing stuff with us. We don't have the eyes for every single thing.
Totally.
So it's really I was this over this long weekend, I was thinking, I mean, this is my life's mission right here, building this community that we have, being passionate like we are about the markets, and just building this and sharing it
Totally.
to benefit those who find it.
Yeah. So if you're not part of the Insider, you can go check that out. It's insidermembership.com. You can see like that TTD trade that Preston was talking about. He shares some of these specifics of trades he's placing, when he gets in, when he adjusts, exactly what he's doing. So if you're learning the money press strategy, it's just an amazing way you can really get comfortable with trading the strategy, look at some real world examples in real time, and follow along with some of those positions. So we'll sign this one off. Thanks as always, Preston. Again, that's insidermembership.com if you want to check out more, you want to follow some of Preston's live trades. But great stuff. Appreciate your insight like always.
Hey, thanks for tuning in. We love this FogCutter, peering through. You know, we're coming up from the mast. We're tempting to see out there and not get fooled by everything that wants to fool us. Thanks so much, Mike, for
Yeah, you bet. We'll see everyone on Monday. We're back to our non-holiday schedule.
That's
So
right.
take care, Preston.
Take care.